Develop success from failure. Discouragement and failure are two of the surest stepping stones to success. Dale Carnegie. My friends, don't worry about screwing up and making mistakes. That's how you learn. That's how you become successful. But you have to be in the market each and every day, 10 to 15 minutes. That's all we ask. Doing your practice trades, following these charts, paying attention to volume, and again, just watching how things work, seeking to understand them. And like we talked about on Wednesday, stepping back and looking at once a week, particularly in the middle of the week. I'm just going to remind you of this. Step back and see what's going on the big chart. Look at how beautiful the S&P chart is. It goes down, it rotates over and goes up. It goes down, it rotates over and goes up. You can follow this. This is not trying to find anomalies in the market and be a day trader. Make pennies. Instead, make dollars in your practice trades. Stick with us. You can figure this out. This is what I love so much about the 3-time frame chart. I hope the Patreon members are making use of the 3 wave trades that we're putting out, along with the weekly vertical crossovers. And I will release this afternoon to everyone the charting cryptos and commodities. Now, let's look at how we're ending the week on the S&P 500. The 4th weekend, look at this. We have penetrated and stayed well below the 30 period, that would be on this chart, 30-week moving average. We saw ourselves positioned to push through it last week. We did so this week, down 1.65%. Going in the right direction. Look at the acceleration in the volume. Now we look at the 2-day chart. Remember, we had an up day on Thursday. Things bumped up on the weekly trend line. And then what happened? Sank back down 1.66% for the day. That's why you have a spinning top, almost a doji here. You do see the volume decreasing. We've talked about that, so pay attention to that. This will be the Thursday, Friday candle. So again, things moving in the right direction. We will keep an eye on things. Of course, how do we practice trade this? We go to SH, which is the inverse of the S&P 500. And of course, as we teach, you use the, there you go. That actually goes up when the S&P goes down. And of course, you use your ATR on the 2-day chart. You put in either 2 times the ATR for your profit margin. You put in 1 ATR for your loss band. And then when you hit those, you either stay in or get out. Now, again, if you hit the loss band, you're out. If you are moving up, now one thing I like to do is modify that a little bit. I use 1 ATR on my profit and my loss bands. When I hit my profit band at 1 ATR, I sell half my position and I let the rest ride. I use the market's money. But however you want to do your practice trades, that's up to you. We just give suggestions. Now look at the Qs. Qs right now, and I am doing this early. It is still about an hour of trading left. We see that at this time, just a little after 3 on Friday, we can see that the NASDAQ 100 is down 0.8%. And look at these dojis just running along this increased volume here. Now, it is showing green volume because it's just barely green. We'll zoom in on this. We're clicking this toggle here on the bottom right-hand corner. You can see that we're right there on the weekly chart. We are just right there, barely in the green. So we are paying attention to that. We're looking at where we are on the 2-day, of course. You can see where it has breached. And again, green for the last 2 2-day candles. Down day to day doesn't mean that things aren't going to be switching. What do we really see here? Well, of course, we see lots of indecision here. We see where it peaked back most recently on the weekly candle beginning the 30th of January. And that, of course, might be our ceiling, one of these right here. Now, if we look right here, we can see that we reached that over the course of this week. So maybe that's our ceiling. Maybe it's a little higher. Maybe it's here. Maybe it's nowhere. Maybe the market's getting ready to push off and stream up because of the bank failures and less likelihood of the Feds raising interest rates for a while, maybe that's going to engage the stock market. Who knows? I don't know. You don't know. The talking heads on TV, they don't know. What we can do, though, is follow these charts. And right now we see a great deal of indecision, maybe bouncing off that 30-period EMA. So again, we'll continue to watch. We'll continue to wait. We'll continue to see how this new week starts. Let's move on to 20-year bonds. Up again today, 1.92%. Things are looking beautiful as bonds go. Super high volume. We can see now, again, during the course of the week, this is the Friday-Monday candle, we reached the most recent high of 109, what does it say on the chart there? 109.10. So again, we are not there right now. We're 107.30, but again, things are moving in the right direction. We'd like to see it clear through what could potentially be, look at where it's hit, the 30 EMA. Now it's above it right now. We'll see how it closes at the end of the day. Are we going to blow through these past tops right here and continue on? Wouldn't that be beautiful to see bonds really break out and hammer up? If we zoom in a little bit on bonds, of course, you can see just how much bonds have gotten hammered. Look at that. I mean, again, for weeks and weeks and weeks, spike up a little bit, drop down again, spike up a little bit, drop, spike, drop. Are they getting ready to take off and blow through these last two spikes? Could be, could just roll off that. This next week will, of course, tell us. That's where we are on bonds. 2 more to go. What's up with gold? Boom! Gold is up 3.24%, blowing through this last spike that we saw. We saw where, again, you saw the insiders distributing and then selling gold, wouldn't let it go any higher, had a false high right here, and then it dropped off. And now we've blown up past all of that. Look over to the left, though. You can see where gold hit a high here, right above where we are now, and where it hit a high here. Let me bring this down a little bit so we can see it. Here. So again, we'll be looking at those as potential ceilings as we move forward. But for those of you who jumped in with this green spinning top and up volume after things bottoming out, it has done well for you, hasn't it? Yes, in those practice trades. I love gold. What's up with Bitcoin? Up for the day, 7.08%. And again, we look back at where things were before and we can see, again, the high that we had back on the week beginning the 13th of February. We can see that high was 25.35. The high today up to 26.93. Again, got a green candle. Bitcoin looks like it's trying to move up. We'll keep an eye on it, see how it goes. Of course, we want to have a chart that is trackable and tradable for us to practice trade. And again, not there yet, but it may be on the way. We'll continue to wait, watch, and see. Like I told you earlier in this broadcast, I am releasing our charting cryptos and commodities for you this afternoon. My friends, thank you so much for being with us. We always appreciate you. We love to hear from you. If you've got questions, problems, concerns, reach out to us, cw@chartingwealth.com. We do all of this for free for you every day the markets are open. Let's see, there was something else I wanted to tell you. Oh, yes. You know, over the last 2 weekends, I've spent my Sundays, part of them, putting together special trainings for you. The first was on volume. The second was on Heikin-Ashi candlesticks. Again, preferencing or referencing these 3 time frame charts. I'm going to do one this weekend, God willing, on Sunday for you on how to use your trend lines. Very, very important. All 3 of those, if you can master all 3 of those, you're going to be doing just fine. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.